We're seeing some peculiar price action today that indicates the stock market might have just entered a zero-sum game stage of the data center build out. I'm going to explain exactly what I'm seeing and why that indicates things might have just turned into a zero-sum game. And then I'll give you a quick market update as well. And I'll give you a little hint. Part of that zero-sum game has Micron stock up 14% today, which is truly an amazing move for a $1 trillion company. Before I begin, I must remind you this is a financial education presentation. You must do your own due diligence before acting on anything you hear in this presentation. More disclaimer information found on Ankerstar.com. Any opinions expressed are mine alone. On the market update, we do have the S&P 500 up about 1/3% today. But that doesn't tell the entire story. This morning, we had the NASDAQ, that tech-focused group, rip higher to the tune of about 2% on the news that Micron had some of the best earnings of all time. But this ended up being an indication that we might really be more in a zero-sum game than we are a game where the winners are really winning. Remember, a zero-sum game is a game in which one person's gain, in this case Micron, is equivalent to another company's loss or another player's loss. So the net change in wealth is zero. Now let me show you what I mean. Of course, Micron, yes, Micron is here up. It's not up 12%, it's up 14%, but it was up about 20% this morning, and 14% on about $1 trillion. We'll call it about $200 billion in value. So look at that. Micron gained $200 billion in market value. But because of that, Apple losing 5% on 4 trillion or so, Apple's down about 200 billion. So for Micron to gain 200 billion in market cap, Apple had to lose 200 billion in market cap. But let's go a little deeper and I'll show you what's going on here. So this is from Micron's quarterly earnings that were released last night, of which they had revenue up 350% year over year to 41 billion. And then if you look at these margins here, let's look at operating margins, the actual, what it costs to operate these things. They have operating margins of 78, 83, 86, and 75% across their various businesses, their various operating segments. So these are not really normal operating margins that you'd see for any company. It's obvious here in these numbers that there's a shortage of their products. And then as a result of the shortage, right, they're selling the water to people in the desert. They are jacking up prices because they can, because of that shortage, which in their defense, they do project the shortage to extend out to 2030 or so, at least to 2029, based on what I've seen. So I guess they're going to be, in their eyes, they're going to be selling water to people in the desert for a very long time, and they're going to keep them in the desert as long as they can. So in that sense, it's like kind of sustainable. But more broadly, from just operating a business, for people who have done that or are familiar, operating margins of 80 to 85% are not very realistic, because it should theoretically open the door for competitors to come in and compete, right? If one company wants operating margins that high, surely somebody else would take operating margins in the space of 60%, so they could come in and undercut them. Now, of course, in this case, it's a supply shortage, so you're not really going to get that to play out quite in that way. But anyone who theoretically could compete would like to, right? Because of the operating environment being so favorable to these businesses. Micron wins, Apple loses. So this is a zero-sum game. Can Micron win without other people losing? It seems like maybe not. Let's go see what else is going on. everyone has to pay these prices. Micron raised their prices 400%, over the past 9 months. Well, Google can't win. So they're essentially, for Micron to win at this point, they're having to hurt Google, and they're having to hurt Meta, and they're having to hurt Amazon, and they're having to hurt Dell and HPE, and really hurt Apple. That's where we're seeing this. This has turned into a zero-sum game. That's all I've got for you today. That's where we're at in the market. My question is, who's going to be first? Is it going to be Microsoft or Meta? Who's going to cry uncle first and say, we want more compute, but it's not a financially viable opportunity at this point, given the current market environment. And as a result, we are going to alter our capital expenditure plans for, the next 2 to 4 quarters as we reevaluate the situation. Who's going to be the first one to come out and say that? It seems like these other companies have shareholders too. Meta has shareholders too. We've talked about Zuckerberg likes his stock going up. Amazon and Google have shareholders too. Apple's a little bit trapped because they're just buying supplies for their phones and computers. So Apple doesn't have as much flexibility. But for those hyperscalers, who's going to be the first one to blink and to bow out of some of this capex? We will see. I don't know. And it could be a long time in the future. This really could play out for 5 years. I just don't know that Google, Meta, and Amazon shareholders will be patient enough for that. I think they might demand a little bit more from those companies. Thank you so much for joining us today. I really do appreciate it, and everyone here at Ankerstar Wealth appreciates that. Hope everyone has a wonderful day, and look forward to talking to you soon.